Good morning, everybody. It is 7:30 in the morning on this 26th day of July, and it's actually weird. It's going to be like a really cool day here. It's going to be like only in the 70s, and it's been like in the 90s and the hundreds. So that'll be nice. Sorry, moving my mic. Okay, let's go ahead and get in on what we've got going on here. Take a look at our markets. We did have just a little bit ago, we had Mario Draghi's talking the ECB decisions coming up, but shockingly, I mean, if any of us have been trading for any length of time, there's usually a huge amount of price action before and after, and there's always these whipsaws. Probably have to wait for the press conference. Just a lot of this summer has been so peculiar when it comes to the volume participation. I mean, it's been stupidly down for a series of days, and then it's up like nuts. I mean, it has been a very interesting summer, and yeah, I mean, I think that's good though. For traders, we like that. Anyways, let's. Okay, now we're getting some movement or something here. I don't know. Let's go ahead. We don't need this one. Going over here. Let's see what's going. We just had U.S. econ numbers weren't the greatest. Tomorrow we're getting GDP in the U.S. numbers coming out, so pay attention to that. But otherwise, looking at all of these markets and how to trade them, we are going to go ahead and get started. Sorry, I'm looking at my screen on another, checking out some stuff, and then just news related things. And anyways, okay, so where are you at? Oh. WhatsApp. So our trades yesterday, we had a series of them that we were looking at. So we were looking at the U.S. dollar, the U.S. dollar, Canadian dollar. We went short at 131.25. Obviously, that has worked out very nicely. About 80 pips worth of movement there we've had. There's a slight bounce in the U.S. dollar, Canadian dollar as we've been moving forward. Now, notice that when we broke into this structure here, you notice how like squelched or squeezed or condensed these lines are in the scan square. I've been watching this, analyzing this, taking notes on this, and I think it's going to be safe to expand this square of 144 out from where it's currently at. But there is some benefit to having it like this because the really wide open zones like this kind of give a heads up to the possible range that would be traded in any of the swings. So just keep that in mind. US dollar, Canadian dollar, that short worked out nicely. Then we had, that was on the 4-hour Ichimoku system. Then we had, if you remember, that was 31.25. We were looking for a break down below. Right there where we had the lagging span crossing below, and we were breaking below the close of the previous stick. All right, then we've got the New Zealand dollar. We wanted to go long at 68.10. We are still within that range. Looks like we're finding some support off of this angle and also off of the conversion line here in the New Zealand dollar. So that is a good sign. We're actually catching a bit of a bid there. That trade is working out nicely. The dollar yen is shockingly, it's trying its best to stay up there. It's not doing very well though. We went short in the dollar yen yesterday at 111.05. That was based on the 4-hour Ichimoku system too. Notice that we really kind of had to wait for price to cross over into being below the cloud before we saw a lot of movement and momentum to the downside. And then that's what we're really observing right here. So keep our eyes on that as this is going down lower. There's that head and shoulders pattern. We've been seeing inverse head and shoulders and regular head and shoulders. That's actually wanted to talk about that pattern here later on. So that is working. The pound dollar. We had a little bit of selling over the last 8 hours. We want to go long at 131.61. I mean, that is still playing out. We are still in the money there, and we should watch that continue to act that way. And then we have gold. Gold is one that's been a little tricky, but I mean, any of these pullbacks that we experienced, I think, are great buy opportunities. So on gold, we've got where were we at? Long at 1231.84, and that was on the 1 hour Ichimoku. I mean, we're still within that value area, so nothing to freak out about. And then the euro, we wanted to go long at 117.14. We traded up as high as into the 117.40 zone, 117. Yeah, that's right. Sorry. And then we kind of started to trade down a little bit. Yesterday, I was watching the press conference with Jean-Claude Juncker and President Trump, and there was a shocking amount of news that came out. I mean, first off, they're discussing totally free trade on some industries and sectors, which is crazy awesome. Trump made the point that the EU and the US represent over 50% of all the trade that is done on the planet. And so, that is a massive trade block. And I mean, if you were to put Canada in that whole block, I mean, the Canada, US, and the EU, I mean, are easy, like probably into the 60% area of the entire trade of the planet. So it's a huge trading block. But what is more of a big deal regarding the entire Russia debacle is that, actually, I thought this was ironic, and I don't mean to get political, but the Secretary of State Mike Pompeo was being grilled on the Hill yesterday, and the Democrat side of the aisle was really pushing for this. If you don't live in the States, there's this whole Russian collusion, unfounded thing dealing with suggesting that the president was somehow involved with having the Russians help win the election, which is a kind of ridiculous. But the whole time, the Secretary of State is getting grilled on the Hill about this collusion. The U.S. or Trump just probably did one of the most damaging things to Russia that we've ever done economically, and that is the EU is going to start taking, and I might be wrong on the wording of this, but I believe their U.S. is going to be the majority natural gas supplier to the EU, so they won't have to go to Russia anymore. And that Russia has kind of held the EU hostage with the natural gas issues, and now they don't have to do that. Now they can get it from their brothers and sisters from across the pond here in the U.S. So that is a huge economic blow to the Russian economy. That is huge pressure on Putin. That is a really, 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 really big deal that really cannot be understated. Okay, enough about that. Then we had one other trade. We're looking at the Aussie dollar. We wanted to go long on the Aussie dollar at 74.21, which is consequently right where we're sitting at. And I like this entry again because this is really, we could just consider this pullback. And I want to talk about these head and shoulder patterns here as we get in here, because I think like really right now this is a good entry. Long at 0.74 2, 1. That is a good long opportunity. Actually, I need to pull that up. Okay, and one sec. Let me grab my book. Wife listens to the TV in the morning while she's getting ready for work. Okay, so the head and shoulders pattern, that is a pretty common pattern. Shows up quite a bit. It's actually like if technically it's a combination of a whole bunch of other patterns, but I was reviewing some old notes and I was kind of going over some of Bulkowski's rating system on patterns, and the head and shoulders pattern, I had it highlighted here somewhere. Oh yeah, head and shoulders. One of the things that I've always mentioned that I said I think trying to trade a head and shoulders pattern is like trying to chase a straight in poker, and I guess I haven't done a very good job of maybe explaining that. What I meant by that is that the pattern should only be traded after it's completed. The literature says it should only be traded after it is formed completely. Its complexity causes many impatient analysts to anticipate its formation and to act prematurely. Its performance and success rate are high, but only after it has formed completely and satisfied all requirements. Okay? And there were some other things I thought highlighted in here, that both the left and right shoulder must be lower than the head, and we all know that. They don't have to be the same height. And then the performance and the positive expectancy of the head and shoulders pattern is improved only slightly by the slope of the neckline. So this is a good example where we have a down, maybe I should draw it a little better. Sometimes I just do a rough drawing. I'll fix that later. I'm trying to not get so distracted. So we have that. There's some evidence that an upward sloping neckline in a bottom formation produces better performance than the standard horizontal neckline. And then where was there? The necklines are never. Bulkowski, he did a lot of his book is. I'll find that. But here's the interesting things, that pullbacks and throwbacks are frequent, roughly 45 to 63% for bottoms and 60 to 67% for tops. So basically what we're saying is that when a head and shoulders pattern is completed, there is often when it's broken, there is often a return to the breakout area of the neckline. That is a common occurrence. So 45 to 63% of the time for bottoms, and then 60 to 67% of the time for tops. It is, and this is actually the performance rank for the standard head and shoulder top is 1. It's the highest ranking possible. And the failure rates for both the top and the bottom are low. Only 3 to 4% failed a 5% gain or more from tops and bottoms in short. The head and shoulders formation has a high rate of reliability as well as profitability, and even makes the point that head and shoulders formations are probably the most common thing that are known about and seen by even non-traders, and it's often used as a joke or a source of disparagement for technical analysis as a whole in the industry. So, yeah. Let's see what else. What else we got going? Cup and handles are not the best, but rounded bottoms are ranked 5. The rounded bottoms in a cup and handle formation are actually very effective. Okay. Now, let's look at what our moves are doing right now. So, gold has been catching a little bit of a bid here as we're getting in closer to the 8 o'clock area. A little bit of selling pressure there. Not a big deal. The euro got a big wick there. There's a lot of indecision in the trading here because Draghi is talking, and I think everybody's trying to digest how is this going to affect the dollar, how is this going to affect the euro, but there is no disagreement that the entire trade deal is a very good gig. And also, just because we really just got to watch these things play out a little bit here. Facebook's earnings yesterday was really yucky. It was bad. It dropped, I think, around 20% or so. I haven't even looked at it to see what it's trading at now, but that has just dropped the NASDAQ. Ooh, let's look at the dollar index. Dollar index has caught a bit of a bid there. Let's watch to see how these play out. Lots of activity. Lots and lots and lots of activity. That's looking a little top heavy. This chart right here actually was what I want to talk about in the head and shoulders. Is that this is a good example of why they suggest that you only trade the breakout and not the anticipation of the breakout, because there's a lot of fake moves. There's a lot of whipsaws. So, and then some traders, what I learned about the head and shoulders pattern when I first started trading was that when you see the head and shoulders pattern, you don't trade the initial breakout. You wait for the pullback and then the continuation. That is what I was always taught and what I had always learned, that was the way to do that. But we've got to keep our education going, because there is a lot of changes in this field. There's new things that come out all the time. It's dangerous to be stuck and static into your trading methodology and your trading theory and practice. And as a Gannist, I even have to recognize that there have been relatively few changes, in the professional literature to W.D. Gann's methods. The only one that I can think of off the top of my head that has changed significantly is in his swing method, he would use a 3-bar reversal, but that has been revised to a 2-bar reversal. And what I mean by that is, if we were to look at a Gann swing chart, like if we were to do the Gann swing chart of the euro dollar, This is a Gann swing chart. And that would be telling us that we would be taking that would be in a long trend right now. This is telling us that the long trade has been initiated, that this is where we would have entered the long here at 1752. And then that really doesn't get broken until price were to close below this swing here at 1574-ish. 115.74, yeah. So that is I mean, there's another way to look at this Gann swing chart. There's Gann swing overlays. So if I did a new chart of the euro, I'm just kind of going over some of these things right now because I want to see how these markets are playing out after the Draghi's talking and all that jazz. Swing, you know what? Gann swing chart overlay. Here we go. So another way to look at a Gann swing chart with regular candlesticks is to just use a Gann swing overlay if you use software that has that, and you will get basically this is the same as this. You can kind of tell they are pretty much the same. Not pretty much, they are the same. They're telling the same thing, they just look differently. Okay. All right. Yeah, we're still getting a lot of movement in our markets here. Oops. Want to just kind of sit on our hands for a minute or two. Ultimately, though, I mean, I'm going to go long on a return past this 180 degrees, so 1745. Then also, why is it lagging there? We had a break of this trend line, which is fantastic. So I'm looking for a return down to the 110.72. And let's see. The Aussie dollar. Aussie dollar got really hit hard up here at the it's a Saturn line and the 360 degree area. It's facing a lot of pressure here, but I mean, we may form an inside bar on the daily if we do close around here. We'll have to see. If we look at the Aussie dollar on the Ichimoku, let me see if that is right or not. Aussie dollar 80 USD. There we go. Oh, I'll probably get a bounce off this 45. That'd be a hell of a good entry, actually. Jump in on that. Actually, anywhere in this value area. Okay. 1 hour Ichimoku. Really overdone on the hourly. We could find some support at the cloud here. 4 hour. 4 hour as well. We could find some support. Lagging span. This is a good thing to watch. Like the lagging span oftentimes bounces off the cloud and these lines. So we could see the Aussie dollar bounce off the cloud and off the 45 and off the top of the cloud there, off the baseline. That could all play out very, very nicely here. And we're getting some movements near the close of the hour here. I bet we have this selling for the next 5 minutes, and then into 8 o'clock we start to see buyers step back in. That is a pretty normal thing to watch happen. And then let's see what else we got. Dollar yen looking a little weak on the top there. Pound dollar. Oh man, I had a resting buy order that almost got hit. Oh my gosh, it was 1 pip away. Oh, that's aggravating. Oh, damn it. Oh, that is so frustrating. It makes me giggle too. Oh, damn. I seriously, like 1 pip away from my buy stop there. Oh, evil brokers. Yeah, euro went down. Now it's coming back up. There's a lot of whipsaw activity, but it's kind of respecting this entire zone here. I mean, where did we found support on the euro? We found support again just now on the major harmonic and the of 116.89 and at the baseline. So we'll see how price responds. If we break the neckline here on this head and shoulders, we should anticipate a pretty nice rally. Gonna wait these 3 minutes here and see what happens, and then watch the open at 8 and 8:30. Lots of stuff going on. Lots of stuff to watch. I think we got a little bit of the bear traps going on in here. So we got New Zealand dollars not doing a whole bunch. Aussie dollars kind of humming around. US dollar, Canadian dollar, meh. Dollar yen coming up. It's the dollar yen is coming up to the baseline on the 4 hour, rather than the conversion line. I mean, could see a reversal off that. Gold. Let's see, gold finding support probably on the baseline. The euro in a supportive zone. The Aussie dollar in a supportive zone. New Zealand dollar could go a little lower on a supportive zone. Dollar yen, it's in a rejection, getting close to a rejection zone. The pound is in a getting into a buy area. Oops, US dollar, Canadian dollar. This could be supportive or reject. I mean, US dollar, Canadian dollar. Oh my gosh, where did it find a base? Right in this middle harmonic range of 130.21. Almost to the pip where we found support there. So that's always fun to watch that happen and play out. But yes, let's see. DXY. Let's see what we got going on. Catching a bit of a bid. We'll see if we want to move, if the dollar index wants to move higher or not. We'll see that here. Got 1 more minute to the close, and then we'll observe what happens at 8 o'clock. I would anticipate today, like tomorrow, is probably not going to be the best day to be in the market. Keep our eyes on this. Want to notice if there's any stuff about any easing, QE easing. So pay attention to that. Draghi was said the economy is proceeding along a solid broad-based growth path. Also, Secretary Mnuchin, I'm just kind of reading off of a news site here. Mnuchin wants to get a NAFTA deal done soon. Let's see what else. Let's see. Okay, enhanced forward guidance has been very effective in aligning expectations with. This is Draghi. Notes on what Draghi said. They don't see a need to modify forward guidance. Exchange rate is not a policy target. The euro has appreciated considerably over the past year or year and a half. Yeah, that's true. There hasn't been much of a change in the assessment of the outlook for growth and inflation or a change in the monetary policy message. Draghi said, latest growth soft patch is give back from an unusual bump in export growth late last year. Overall risks to growth are still broadly balanced. One positive development is nominal wage performance, which has been driven by negotiated wages. The only version of the statement that conveys the policy message is the English version. What the hell's that? Oh, okay. That's the transcript. Money market expectations are very well aligned with the ECB message. Expect broad-based wage growth. And Draghi said money market expectations are well aligned with ECB expectations. And currently, money markets are pricing in a 57% chance of a 10 basis point hike in September of 2019. I think that that's a pretty good bet. You know, with the U.S. raising its interest rates, you know, that's going to, the EU definitely will be the next one to follow suit. Well, really the EU, Canada, or Britain will definitely want to raise their interest rates. That is something we can expect. And so, I mean, just knowing that, if you were somebody who was going to trade based solely on fundamentals, and it's more like gambling than anything, but you could be short the dollar today and long the euro and just, you know, walk away and wait till the end of fall and see how you're doing. That's one way. Okay, let's see. What do we got? Gold catching a little bit of a bid there. Okay, now that we're at the 8 o'clock hour. Euro as well. I mean, it's below, close below 117, but we'll see if there's enough gumption to push it beyond that and push it higher. Let's see. Might be enough momentum to do it. Aussie dollar, similar area, similar zone. New Zealand dollar, same thing. US dollar yen, still not, gosh, I mean, really not a whole lot of convincing volume there, guys. It's pretty yuck. Pound, yeah, out of all of them, really not catching the most issue. But yeah, I mean, right now, folks, it's, if you've got open trades from yesterday, earlier in the week that are in the money, I don't see any reason to like peel any profit off unless it's near an entry point and you probably just want to go into cash. Lots of fundamental stuff today and tomorrow with GDP numbers coming out. So we've got to be pretty cautious about the positions that we want to trade for the day. You know, it's very possible we don't get a lot of movement past 10 a.m. Central Time, so be aware of that. Just be careful with your trades and watch your positions. Kind of a short day today, but that's all right. And yeah, I will talk with you all tomorrow morning. Bye-bye.